following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're doing well this morning. God, I love it when the yen goes up, when the yen chart goes up, put it that way, in the devaluation of the yen. Got some really cool situations happening right now. This is one of them. Joey and I had talked about, what was two of his favorite trades, the dollar going north, which has been on its little choo-choo train going north there, and the volatility trade. Now, just want to kind of bring things back in perspective on those are kind of long-term desires. And a lot of times, in my trading account, a lot of times I'll have a sub-account, one position trades and kind of longer term MOs, and the other one short term kind of scalpish type scenarios. And you never want to confuse the two. So a lot of people make a mistake, and I've made them all. If Larry's listening, he might have made some too. Where you kind of turn a short term trade into a long term position because it's going against you. And, we'll look at it again tomorrow. I'll get out of that trade. You guys who are in the den, who have been doing this for a while, you probably know exactly what I'm talking about. So, and you don't want to make the mistake of having those two sub accounts, keeping them separate, short-term trades, long-term trades, and then moving a short-term trade into the long-term trade. You guys have probably done that before. Even if you segregate accounts, it's easy to do. If Tom's listening, he may have done something similar to that too. We've all made those mistakes. But the things that Joey was talking about and I was talking about with the dollar and the volatility trade on the S&Ps, those are long-term developing things. And the reason you kind of look at those as your MO for the, the high probability situation over the long run. And he talked about this. He talked about suffering also through some of the volatility of having those long-term positional types, pieces in your portfolio, the Facebooks of the world, the Amazons in the world, things like that. You kind of are okay holding those things through earnings announcements sometimes because that's just a part of the game. That's a 50-50 deal. You guys know that. But if it's a kind of a core position that you don't want to get rattled out of, those are kind of just things you got to get through. And a lot, we talked about hedges around those type environments and, how that may not even be worth it. But when you've got the trading scenarios, you kind of got to watch out for those, the impending volatility on the earnings announcements, things like that. So the trades that we were talking about with the dollar and the volatility trade, that's kind of how I was looking at this euro trade. And we're going to talk about the yen a little bit more in a second, but just to kind of circle the wagons a little bit on the concept, this is something I started talking about this literally in August and maybe even before then, but it was the short with the hedge. And that was because, this is my position sub account. And we talked about when it gets down to some initial targets, taking some weight off. I tell you what, this is a lovely situation, and I would love to see this thing close on a weekly below 109 now. But I personally left some contracts on, and Joey has talked about in the past about leaving some weight on just to remind you not to play around with it and go into this, I'm going to be a winner all the time and try to catch every move up or down. The leverage is towards the short side on this product, but we are at a major inflection point, right? So that being said, going back to the end trade, we had a lot of, we had a little bit of a fake out before, but again, you got to turn the wrench the same way when we have these setups like this. This is, again, on your position account, the trading account side, if you kind of follow the theory that I was talking about earlier, again, there's a lot of theories to short-term trading, and if I could talk to you for an entire week about that, but, the big money's literally, as Joey was talking about this too, is going to be made on the longer-term positions, and actually, a lot of times that larger money is going to be made overnight. So looking at a situation like this, there's a lot of things that come to mind when it comes to just trading, I guess, 201, which is, you're going to have opportunities that happen during the year, and you're going to have setups that look really, really good. And you've always got to get stops in. But sometimes when those really high probability setups present themselves, you've got to look at that as I can make my entire month in trading sometimes, or even my entire year sometimes, on getting a big victory on the board. Not that you've got to stretch yourself out and get over leveraged in the trade, but you better be in it to win it when those types of scenarios happen and the worm is turning on some of these positions that you can get into when the longer term technical setup changes and reverses, breaks stride, whatever you want to call it. So again, these bigger, longer term setups, sometimes you kind of miss the forest for the trees, or whatever that saying is, trees for the forest. And it's amazing I can't put that phrase together right now. But remember, the longer term setups, when they happen, are the higher probability scenarios that you can really get a really decent move from. Relax the stops a little bit, possibly kind of turn it into a free trade as it develops. So you've locked in the profits, and now you're just playing with house money, as they say. So don't forget that you're sitting in front of these screens all day, these shorter term gyrations. Maybe you're looking at 60-minute, maybe some of you are looking at 5-minute profiles on some of our indicators. I don't know. But don't lose sight that larger picture is always going to ring the register more consistently and harder than getting the smaller victories. So, just kind of putting those on your radar screen this morning as Logan reflects on his prior mistakes day. How's that sound? All right, so looking at the British pound, we're going to go to break. We're going to hit this really hard, and we're going to talk about this just a tad. So hang in there, and we will be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Going to finish up with the British pound here. The inflection, this is the one, same as the ones yesterday. It's 122 down below 122.64. These are the 240 profiles, but again, we're kind of compressing into some tighter ranges here. So you may want to look at trading breakouts outside 122, down below 122.64 above. But again, based on the stuff we talked about last segment, the longer term inflection points are obviously better setups in general for the bigger moves. And this is where we're at on the dailies. So you got 123.14, 120.41 down below, and might want to just sit tight with this one unless you're trying to trade some breakouts on it. That's the scene there. All right. Let's hit the Aussie dollar really quick. Again, just still trying to catch a bid on this one whenever possible. 75.80 down there. That was kind of decent area. That's that POC on the weekly and kind of former support on the on the daily there. And again, I truly believe this thing's ultimately getting above 80. That's my thoughts on it. So we hit the euro and the yen, the pound, the Aussie dollar, and now we're going to go into a request in the den. The Chilean peso, USD. Let's see if nope. CLP, USD CLP. You're not hiding any money down there, Andrew, are you? I'm just kidding. Is it a good place to hide? I don't know. If it is, well, I'm going to research this on the break. How about that? USD CLP. I'm not getting it. Let me try something else here. Not even paying attention to A0-FX. How about that? 654. Does that sound about right? Well, I'll tell you what, proof in the pudding here. If this is CLP USD cross, okay. All right. This is our weekly view. So again, you got some form of semblance of support around 650.56. And that's basically where you'd be looking at picking a battle there. This is the weekly profiles. Just big numbers up top, 673.06, down below 650.56. Hadn't ever traded that. And that's a lot, saying a lot if I've never traded something. Gold still kind of stuck in the mud here in the daily profile. 1278.50 up top, 1252 down below. Nothing really happening there. Crude, really looking for this to get going on the downside. We talked about 49.50 being some big numbers down below. That's the POC on the weekly, 49.52 and 49.49 on the daily. So kind of got down into those numbers yesterday and popped its head up. We talked about that being a big area, and it hit 49.62. So definitely got within 10 cents of the neighborhood and popped up there. So that's the situation on crude. Let me get my scanner up here. There we go. I don't show the scanner all the time. I show the visuals of the charts and the profiles, but all these numbers are within the scanner. And you can do some really cool sorts to find things acting a certain way relative to the profiles. And I was going to show you something. I'll tee that up on the break there. Let's take a look at Facebook. This is like the gift that keeps on giving. So day before yesterday, we just did a rocket ship there, and now we're trading. Let me see what we're trading this morning. 133.51. That's a real print. It looks like it. Yep. So got the breakout on the weekly above 130.14. Talked about not shorting ever this particular instrument. Here's the daily before the launching pad happened, and it's not too high, folks. This stock is not too high. Do not stand in the way of a freight train. And we've talked about that for this one, Facebook, and this one, Amazon. And we've talked about how cool it is. And this thing took off yesterday like nobody's business. The weekly profile appearing below price action. When you see those, a lot of times we kind of throw that out there on different time frames. But, we talk about longer term MOs like we did last segment. Do not stand in the way of this stock until they break this by antitrust rules or even hint at it. Stay away. Apple, we got something cooking today in Apple. All right. This is a real print. 118.09. So, you got the Samsung blow up going on here, which could magnify some return or some numbers that come out on Apple. But here's the 114.82. I haven't been participating in the long on this because we talked about, I was kind of waiting for this to get below 110 again. That didn't happen. But again, those are things that at least we are staying away from trying to short this for no reason here. So again, kind of keeping the profiles in mind. We got a big announcement out today. I would be kind of concerned to go into these earnings today with any position on Apple. Anything can happen. Something else. Amazon's coming up, of course. Google is also. Let's take a look at Tesla really quick. All right. Well, I'm not a huge fan of this company's stock price. 201 didn't hold. I was looking at to short it. It's been nerve-wracking. Put a couple of shares on, not a lot. But, again, the longer-term picture, I think, on this one's, well, Musk could come out that he's, using a philosopher's stone to make gold now. That could be in order next, but we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think they're having a run on the Colombian peso right now, or the Chilean peso, excuse me. That's the power of the den. Here we go. It's just a joke. All right, let's take a look at the dollar really quick. You know, if you're just kind of joining us and have not caught the past couple of weeks, do you step in and buy the dollar now? In my kind of opinion, you always kind of try to buy breakouts or buy support. This is our 240s on the dollar. Talked about 98.35 was kind of support on this, and it just doesn't even want to pull back now. This is an incredible move, and Joey talked about with me 99, 100 is probably in order here. But again, sometimes you can't chase something. Every time I've done that, it's bit me. I think we've got a caller right now. Ed, are you on with us?
Yeah, real quick. Rambus, they came out with their earnings. They beat them. They're going to pop 1280. Should I touch it or wait? They close at 1199.
Okay, let's take a look at it. Thanks for calling in, by the way.
No problem.
How's the weather up there in New Jersey?
It's good. It's good.
Good.
There's been corruption in the air like you wouldn't believe. They just raised the gas tax 23 cents.
Oh Lord. Do they just want to? Do they just want to like transplant everybody out of the north to somewhere else? I mean, it's crazy.
Right?
Yeah.
Crazy. They just passed a tax. They should all be hung. That's for another day.
Yeah. All right. 1280. Look, it looks like we're printing about 1280 right now. We're in that neighborhood. So, listen, this is kind of interesting. You put this on the radar screen here. 1210 is going to be daily support. So what I would do with this is I would wait patiently, maybe not chase this thing on the opening. You got some people adjusting positions. I think you're probably going to have just some normal profit taken. 1210 would be support on this, and that would be, if you look at these profiles I'm showing right now, that would be kind of a get up above and go back and retest. A daily close above here, I wouldn't sweat it if it never pulls back today. 1210, that's going to be your powerful move and high probability situation to try to pick some up in a kind of a breakout, go back and retest former resistance, now support. So that's your number to probably focus on here.
All right, sounds good. Thank you. Bye.
Okay, yeah, thanks for calling in. Yeah, it always shocks me. It just blows my mind. I was dating a girl up in Rochester forever, from Rochester. She had a house up there, and she, the tax rate on owning a piece of real estate, house, the whole 9 yards up there. I was like, my goodness, those are just foreign numbers. It's almost, to me, I mean, I think in Raleigh, I sold that house, but it's like 0.3%, something like that. It was crazy. And she was paying 3 or something, just completely off the radar screen. What I would consider the Northeast, they just almost are forcing people to want to think about moving out of there sometimes. It's crazy. All right. But you guys up there know what I'm talking about. Let's take a look at some banks. Barclays. This is the situation on BCS. 794, obviously caught a little bid there. 934, I think, is where you're going to look at resistance on this. We're kind of not there yet, even though we've kind of had a decent move on a relative scale lately. I think 934 is going to be something you could sell. This bank's obviously not in favor here. Let's take a look at Credit Suisse. I always love saying that. Yeah, I mean, I think we're right at an area you could look at actually shorting it right now. 1392. I mean, the market in general, the financial sector, we're going to take a look at that also. But right now we're trading 1381. So getting back down below 1382. I actually like this from the short side. I like the relative weakness of it. Turn the rents the same way. Continue to pound something that is weak. Put the stops in. Here's Deutsche Bank. Okay, so this is when I forgot who called in a couple of weeks ago. Talked about Deutsche Bank possibly buying puts as if the thing was going to go to sub 5. Talked about waiting patiently. 14.16 was the big number on DB. We kind of still in the noise area for the most part. So I think this will be something you could still get on your horse on the short side below 14.16, and a weekly close back down below there is going to really put a new tone on this from its recent meteoric climb. RBS, Royal Bank of Scotland. God, if you read the news on these things, I mean, Jamie Dimon definitely enabled these banks to do what they do. RBS, okay. So previous profile reached the high, reached the low. Current profile on the long-term weekly has contracted, a pretty thin profile. So this one, I'd be looking to not trade inside the profile, trade breakdowns below 431 or breakouts above 499 on RBS. Goldman Sachs. Okay, so as we've broken above 170.71 on a weekly, you know it's okay to be long, not okay to be short here, so you don't have anything to play defense against. And 170.71 definitely was breached, and we just have to look at that as a wait-and-see situation now on Goldman Sachs. Got an email about that one. Let's go to the criminal organization of all times here. I can't imagine their lawyers getting on me about, I mean, they would make me suffer. They haven't, anybody who's trying to change their ways in the media, that'd be painful for me. 67.77 support here. That's the case on JP Morgan, strong of the financial sector. Not showing any hints of being a short candidate. Let's go back to our buddy, Wells Fargo. 45.52, looks like we're printing 45.42 this morning. So here's the long term on Wells Fargo. So again, you know, you get into these inflection points, you got to take some weight off on the short side like we talked about. And this is our weekly numbers now. Big number, 46.53 on this. I still think their numbers coming up soon here are going to be looked at differently. We'll finish that thought when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Somebody was mentioning busting up some wood with a maul. I mean, I was an idiot one time trying to split sweet gum. They gave that tree the name gum for a reason. It does not split very well. You will bury like 4 wedges in one little log trying to split that stuff. It's impossible. All right, here we go. Anyway, downtrend resistance, taking a look at some of the things in the scanner on this particular sort, custom sort, just click a button, you're in business there. Disney came up. Hadn't looked at this in a while. 92 was something I was hoping we got that close below, go back, retest, had some news out, obviously. I really like how this thing has reversed around the daily, so kind of got up there, tried it twice in a row, closed below it again, 93.58. Could be a short opportunity. Not a lot of, upside potential right now. 92 would be the target right now on Disney. Couple other stocks in here. These are ones that are Hewlett Packard. Let's take a look at that one. HPQ. All right, so it looks like it's printing about 14 pre-market. So we're back into, we've had a big slide on this one. This has been a strong stock. We've had a severe pullback. I'm not so sure this is, I don't know, kind of had a really big percentage pullback in the stock. It's almost as if you don't want to take this short right now. I know we had that close below the profile on the weekly the week before, but I think you need to look at this as a possible long opportunity above that 14 area, or 1402, excuse me. So again, here's the daily on it. But HPQ might just kind of got to wait and see. A little bit concerned to go short down here. So maybe a long opportunity above 1402, especially a weekly close above there, would put this back in business. So even though it's on downtrend resistance, that particular custom sort, may want to hold off on that one. Let's see what's going on here. Whirlpool. A little bit of an intraday trading opportunity on Whirlpool WHR on the short side. Urban Outfitters. Not a lot of leverage there. Phillips 66. Let's take a look at PSX really quick. All right. So here's Phillips 66. My opinion on oil right now is we may kind of come off here. So kind of getting back up into the weekly for highs around 80.67. decent opportunity on that one. Let's take a look at SWN. All right, so this is one that just 1211 didn't hold, so now it's kind of a wait and see on SWN. That didn't hold on the support area. Let's take a look at another sort here. Breakouts. Let's take a look at General Motors here really quick. So this is one broke out on the weekly and the daily. 32.26 weekly unfair high, 32.31. So crossed those borders and didn't want to look back there. So that's going to be your support. Kind of like, not totally similar to Rambus like we looked at earlier, but again, you know, you've got something you definitely know it's not time to short it. Let's take a look at State Street. Support now, 71 on that stock. T-Mobile, we're going to take a look at that one really quick. TMUS, obviously, you know, you kind of saw this coming. They've been doing a lot of innovative work there and increased their user base big time. TMWS, let's take a look. That was actually on my list this morning, regardless of that sort. 5109 pre-market. There's the situation on TMUS. Don't be a hero and try to short that one right now. Netflix, let's hit that one really quick. Well, I was hoping we would get back down below 96.18 to look at it from the short side. Obviously, a lot of news out on it lately and its relationship to some other companies. Here's the short-term numbers on Netflix. There's your 240s, 129.21 and 125.10. Let's take a look at Twitter. All right, so, you know, we talked about possibly 15 was going to be in order for this one. We've had a new profile edge higher, actually, and that reversal above 17.18 is going to be support on it right now. And again, it's kind of wild, you know, all the news that happened. You guys know the story there, but again, we've got profiles kind of edging higher right now. And I actually thought we'd see 15 before we started seeing any type of bounce mechanism, but now you've got a new floor here at 17.18 on Twitter to orient stops around. Let's take a look at natural gas. Excuse me. All right, so right at the bottom of the profile here, you got a chance, a little bit of a trading opportunity. 2.802, we're right there. We've hit 2.809 this morning. For you guys who are trading November natural gas. Copper rallying back up into now weekly inflection point 214.05. You've got a little bit of a trading opportunity on the short side here. I didn't see this rallying like that, but again, you know, sometimes we don't have anything to hang on to, and now you've got some serious lines in the sand. 214.02, 214.57 on natural gas. Let's take a look at Johnson & Johnson. This is one we've had on our short radar screen for a while. There's that action, kind of consolidating down here on the weekly. Definitely not on sale. No reason to buy that. Procter & Gamble came off, actually. So, you know, when we kind of close back in the profiles and then we rally back up into it, these are all in the scanner, folks. Now we've closed below. This was one that I was really high on for a long time, catching the bids, and then getting back in the profile. You kind of got to wait, and thank goodness that area there, 85.23. I got stopped out of that, and the weekly close definitely put the line in the sand. You got to wait on that one. We're trading 87.10 this morning, so we're back above profiles, the bottom of the profile. 85.23. We're going to talk about this a little bit more when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Procter & Gamble news out this morning. Forgot to mention that. Trading about 87 right now. So has reversed. Not a big fan of shorting this stock. You guys have watched the show, but again, put the stake in the ground. That weekly close below profiles 2 weeks ago, and now trading above. Obviously back in the balanced area, so kind of a no trade right now. Let's take a look at the E-minis. God, are you guys tired of this thing being in a range or what? I'm just... And this is, again, this is another kind of like the Euro trade, kind of a long-term deal on the VIX situation that Joey was talking about, and Steve Banger obviously has been talking about. Just kind of waiting it out, still making lower highs, higher lows, getting back above 2133, 34, and that's the weekly for lows, but pressing up into these 2147, A lot of resistance there. We talked about that yesterday, in fact. So, again, could kind of continue to compress down into a point, hopefully break out at some point. Then that VIX trade, if you will, the long-term buy volatility situation, I think you're still going to be a big winner on that. It's just you never know when that's going to happen, and it's hard to guess the direction on the S&Ps, especially when it's kind of lower highs, higher lows type situation as it is right now. Let's take a look at McDonald's really quick, and then we're going to take a look at Google. So here's the situation on McDonald's. Still like shorting against this 115.42, stops above on McDonald's. Let's take a look at here's Google. At least these things keep you out of shorting this. GOOG trading 815 right now. Looks like pre-market 815.50. That's the situation there. Let's take a look at Home Depot. Let's see, this morning looks like we are printing 127, that general area. So trading down a little bit. Here's the long term on Home Depot, just kind of petering down there. And talked about 126.46 possible short area. That didn't work out. We've got to wait and see now on Home Depot. Not a lot of direction there. IBM. So, you know, talked about this one, kind of broke. I was looking at this from the long side for a while after that breakout, and had provided some decent opportunities there. But, you know, after the close below 156, it's kind of a wait and see on IBM now. All right, to wrap up, Euro looking very heavy. The dollar. You know my stance on the dollar. Let me get rid of the currency thing here. Let's go back to the dollar. Continuing to move up. Now we're trading above 98.79, 98.80. That's going to be short-term support on it. Euro's continuing to get hammered below 109. And that's it for the show today, folks. Stay tuned for Larry, Tom, Steve Rhodes, David White, Basil, and the rest of the people at TFNN all day long. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.